Hi Ken and Mary, I'm Cheryl from London and here's my money dilemma. I was wondering if it's a good idea to empty my S&P account to clear my £12,000 mortgage, which I'm currently overpaying.
Hey guys,
Hey.
Welcome to our first episode of our new series titled Money Dilemmas, where for the first time we get to answer your awkward or juicy or even complex money dilemmas.
Yep, this series is just chilled out. As you can see, we've got ourselves some hot chocolate, even some digestive biscuits. Relaxed vibes, right?
Yeah, just get our unfiltered opinions.
Yep. It's going to be real though, okay? Let's keep it real. But wanted to say that this series is us giving you a sneak peek into what we do at Financial Joy Academy, where every 2 weeks we offer coaching calls to our dream makers. Financial Joy Academy is therefore sponsoring this series. It's a membership platform that we've created to bring together people of a similar mindset for us all to build wealth together and ultimately achieve financial independence this decade. But instead of just talking about the ideas or sharing knowledge, FJA is all about accountability, it's about community, it's actually about implementing things and actually doing it. If you want to learn more about FJA, we'll put a link to it below and above to head over and check it out. But let's dive straight in. We've got a dilemma on our hands, right?
Yes, play
Okay.
the audio.
So let's play it and let's listen.
Hi Ken and Mary, I'm Cheryl from London and here's my money dilemma. I was wondering if it's a good idea to empty my S&P account to clear my £12,000 mortgage, which I'm currently overpaying. I buy £350 of ETF a month, which would go up to £750 a month with no mortgage payments. I've only had the S&P since July 2019 and was thinking that it would build back up fast with no payments. Thank you for answering and I look forward to your video. Bye.
Okay. Shout out to Cheryl from London.
Shout out Cheryl from London.
So basically what she's saying is, if you're a bit confused, S&P, she's referring to the S&P 500, right? She's got some money invested and she's also got a mortgage, right? And she's thinking to herself, like, I'm close to paying off my mortgage. By the way, Cheryl, like, you're in an amazing place. You're close to paying off your mortgage. So she's thinking, should she take the money out from her investing account, her ISA account, and go and invest it instead into her property and pay off the mortgage?
Yeah, absolutely. So we thought that was really interesting dilemma. So then we were able to get more information from Cheryl. And so we're going to read out the further information that she sent to us. So we asked the following question. How much do you have invested in S&P 500? To which she replied, 9K. Is this a stocks and shares ISA? Yes, ETF with Vanguard. How much do you owe in total in your mortgage now and hoping to pay off? So she said 12K at the moment, which will be less by the time I want to clear it. On the annual statement, I noticed the early repayments charge was less than £1,000. So that's something to bear in mind.
Interesting.
What was your property price when you bought it? A flat which was bought under the Right to Buy scheme in 2004 for £39,000 after discount. So £86,000 without the discount. I wasn't in stable work or financially savvy to understand to pay off early, as I could have been on house 18 by now. Okay, so roughly how much is a property worth now? She said her neighbour sold in 2017 for £240,000.
That's interesting. Quite a big jump, really, from where she started off.
Exactly.
£39,000 with a discount. Okay, cool.
Do you have any other investments apart from the property and the money in S&P 500? So she says £1,500 with Hargreaves and Lansdowne, which I plan on taking 1K to put towards paying off the mortgage. Bought shares in Capital, which have tanked, but still holding on to it with hope that they go up. Okay. Trying to save my 6 months emergency funds, but keep on dipping into it.
That's interesting.
Another thing to bear in mind. I'm employed full-time on the basic salary of £32,000 with approximately 5 yearly enhancements. I was hoping to do this early in the new year, and I'm due to get an inheritance of approximately £40,000 in the new year. So wanted to be mortgage free to be able to buy another property and rent out one.
Okay.
Hope I haven't overloaded you with information. Absolutely not, Cheryl. So glad to be able to get your respected opinion, especially more so now that you have been on the news. that made us chuckle.
Right.
Thank
Okay.
you.
So interesting.
Yeah.
Interesting dilemma, Cheryl. By the way, I've been on the news a handful of times now.
Quite a few times.
It's just that we don't usually publish them necessarily on YouTube.
Yeah, but I suggested let's post this one on YouTube.
Yeah, and it's funny. Mary and I, slight trivia. Mary and I were laughing because we were saying to ourselves, "It's funny how we recently got the verified thing on Instagram, and all of a sudden, people who like just completely ignored everything we've been doing so far,
They've just been
suddenly taking us seriously just because of like a verification thing." Anyway, slight digression, but good dilemma to have on our hands. A few things really jumped out to us as we were listening to that and thinking about it. I think the first thing that jumped out was you mentioned the S&P 500 Festival. Great place to have had your money invested. The S&P 500 has done amazing things in the last, 18 months you've had money in there. So since July.
Since July 2019.
And if we just take a quick peek, I mean, I've got my laptop here. What's been going on with the S&P 500? I'll just bring it up so you guys can see.
Yeah, so since Cheryl said that she wanted to, take out the money from her investments, we thought it would be a very good idea to have a look at S&P 500 and see how it's been performing since July 2019 when she first invested in the S&P 500. From July 2019 to date, her investments have gone up by 54.28%.
Yeah.
That is a staggering increase.
Yeah, that is a big increase.
2019.
Yeah.
That's amazing.
Yeah, so to actually want to take that money out and then put it into a mortgage to pay off your mortgage. I know it's pretty exciting to try and pay off your mortgage.
Yeah.
But like, I don't think it makes sense at all. If we were in your shoes, with those sort of returns you're getting from having your money invested in the S&P 500, it doesn't make sense to want to do that for a number of reasons. First of all, you've got the early repayment charge that you mentioned there, which sits at around, it's around £1,000 thereabout. He says less than 1,000. But, that's pretty much you throwing money down the drain by paying off a mortgage, just like that.
Yeah. I think if there wasn't the early repayment charge, then we would say, okay, it possibly is a good idea. But yeah, like you said, it's literally giving money to the bank, giving more money to the bank. So
and it's not even that it is possibly a good idea. There are other considerations as well, because to what extent, this is why we asked you those additional questions, like what other investments do you have? Do you have an emergency fund? Do you have other forms of liquidity?
Yeah.
That's why we asked you those questions.
So she said that she's been trying to save for an emergency fund, but keeps dipping into it.
Yeah.
And so, like you said, we would definitely strongly consider, saving up, building your emergency fund really before looking to putting more money into your property. It's, especially with, the events of 2020, if ever, there's the financial stability is very, very crucial during this time. So definitely we would say build up an emergency fund first.
Yeah, and beyond the emergency fund, look, this is all about a question of, are you putting all your eggs in one basket? Yeah. This is about diversification. Do you really want to put all your money, everything you've got, by the sounds of it, is really the property. You've got some money, some liquidity in stocks that you've got in the fund you've got invested with the S&P 500. So as much as it's very exciting to want to go in and pay it off, I think what you're doing already is fantastic in that you're already overpaying. You're doing two things. You're overpaying on your mortgage and at the same time you are paying and investing through the stock market. So why change that? Why the sudden need to change that?
I reckon it's because she said that she wants to, when she sent the extra information, Cheryl then went on to say she wants to buy an investment property.
Yep.
So I'm guessing it's because she knows that she'll be means tested. She then doesn't want to have that mortgage,
She'll be tested for affordability checks, basically.
She'll be tested, exactly. She'll be mean tested and tested affordability checks and doesn't want that current mortgage basically flagging up.
As something else she has to pay for every single month.
Exactly, because then that would then determine how much she can then borrow.
Yeah, but I get that. But at the same time, like, if any lender would look to see how much debt she's got anyway, and this is telling us that, she's got only 12K left to pay off, which is not a lot at all. It's only 12K to pay off. And I get the point she's trying to make. What I thought was fascinating, though, was this idea that she's getting an inheritance, is an expected inheritance.
Yes.
And it's good that you're already planning towards your inheritance. You're not looking to go and blow it and buy yourself a really flashy car and stuff like that. You're actually thinking about investing it. So you are making quite good, like your head seems to be at the right place. And the fact that you've actually submitted this dilemma even tells us that you're actually thinking about how to be smarter with your money overall. And we were just thinking about that, the idea of putting more money into property, because it's so easy. Property is a default for many people. They just suddenly go, I want to invest in property because they feel they understand it. There's an emotion attached to property because you live in one and you feel like you understand it. But there's a question of putting too much of your eggs into one particular asset class, and even in one country. So you're doing a good job to diversify by investing in America through the S&P 500. That's a good thing. But what you want really is a combination of liquidity, so easy access to your money. Secondly, when your money diversified so that it reduces risk, right? But even with that, we still thought that perhaps the property thing could come, but it depends on what type of strategy she goes for.
Exactly. So, she wants to buy to let. So, if she does her calculations right, then she could potentially buy a property where she gets a good return on her investment. So she could probably, if she doesn't put the whole 40K in, yes, she lives in London, but we're assuming with the 40K, she's not planning to buy a property in London.
You can't buy anywhere in London really for 40K.
So assuming she wants to buy up north and maybe put down a deposit of maybe 25 or 30K, then she will have the remaining 15K to do, stamp duty, solicitor's fees, and maybe whatever house renovations. And then, maybe she had like 2 tenants in, then...
2 tenants in one...
Could be one, sorry.
It could be one, you're right. It could be a family, right? It could be a family. It could be 2 individuals in 2 rooms, right? But your point essentially is what Mary, from what I understand you're saying essentially is that she could invest 30K of that property, of her deposit, that money she's getting in. And let's assume she put down 25% for a buy-to-let. And she's a basic rate taxpayer, and we know that because she tells us how much she earns.
She's on 30,
then that would be a property of around £120,000. And if we assume that, let's assume that she makes net of expenses, let's say she's got an interest-only mortgage and she makes maybe £500 or something per month, which times 12 is £6,000. 6,000 divided by how much she puts in 30K is about 20%. That would be almost a 20% return thereabouts. These are just assumptions on the actual money that she put in. But there are other considerations because, again, like we say, investing in property is an illiquid asset class. Gives you cash flow potentially if your strategy is to invest in an area for cash flow, for income, rather than capital appreciation. So, like you mentioned, up north, for example. But there's tax considerations to think about as well, because when you own a second property, you need to pay that extra 3% stamp duty.
Exactly.
And then obviously, buy-to-let investments have become less lucrative, as it were. They still work for a basic rate taxpayer, but which you are. But once you hit that higher rate, it starts to become pretty difficult. But I say all this to say that we had a really interesting guest on our channel recently.
Yes, we did. We had Perry on How Much Do They Make series. And Perry basically is a cab driver by day and he's a property developer by night. And so he's been able to build up a portfolio of how many properties now? I
think he's done 4. I think he's done 4, but his plans were to get to 20.
Yes, his plans to get to 20 because his aim is to raise £1 million and obviously retire with £1 million in accessible assets. And so Perry's strategy of buying properties up north, he didn't go into too much detail
on the channel,
but he did do an amazing masterclass in our academy over at FJ Academy, where he really talks about his strategy, his property strategy, even goes into, details of showing how he assesses a deal. So if it's something that you're interested in, guys, do check out the Financial Joy Academy, as Ken mentioned before, for various masterclasses and courses in regards to property, if that is one of your strategies that you're considering in terms of making money.
We're going to link to that one. I was going to say the one that Perry did, the exact one, in the descriptions below and above. Feel free to go and check it out for yourself. But it's a proper masterclass.
Brilliant.
I interviewed him, right?
Yeah, so, you did.
And I asked a lot of questions. Put it that way. And Perry was excellent. Other things, by the way, worth mentioning, apart from property investing, that we explore FJA, obviously stock market investing, creating a successful online business, maximizing your career, working towards becoming 100% debt-free. All those strategies are things that we actually teach people how to properly implement within the academy. So just worth mentioning. But essentially what we're saying with this dilemma is to answer her core question. Should she go and take her money out of her S&P 500 and go and invest it in her house? We would say no. That's what we would say. Talking about property, it's actually worth looking at property returns, how property, what the implied return is. Just having a quick look on my laptop here. And it's interesting looking up, and I'll share this on the screen for you guys. She said she bought her property discounted, but the original price would have been £86,000. Assuming we kept, looked at that price from 2004 to 2021, assuming, her property is still worth what her neighbor sold at 240,000. We can see on the screen there that that's implied an annual growth, capital appreciation of 6.22%.
Okay.
From 2004, and that's a capital element. And obviously a complete return includes an income element of the return. So you add the income return plus capital returns, give you a total return. We say all that to say that really and truly, Cheryl, what you need to do is compare what returns you might generate from the stock market, for example, as an asset class, to what you might generate from property. Really compare those. Do the maths and compare those before you jump ahead and take your 40K and put straight into property. Because if you put it straight into property, there's the additional stamp duty to pay. Then you need to think about what's the payback for that money you've put into stamp duty. Like how many months would it take to pay back that money, that additional 3% you're paying in stamp duty, compared to if you put it into, say, the stock market. You're not paying out thousands and thousands on stamp duty. Then you're also putting it in a tax efficient environment. So we're just sharing that to say there are other considerations when it comes to that, your other money that you're looking to invest. But as far as the question you asked us, should you take your S&P 500 money and put it into your property, we would say right now, no. Don't incur your 1% early repayment charge. Wait and have the option. The option to pay it off is far more important, given your personal circumstances. For somebody else, we might offer a different viewpoint. But given your personal circumstances, because you don't have a lot of liquidity in existence outside of the property, like if we were in your shoes, and this is not, everything we said today is not financial advice, but if we were in your shoes, personally, we would not do it. We will not pull that trigger straight away. No.
Focus, like we said, on building up your emergency fund and also, still work on paying down your mortgage, like pay it all the way down, but not totally off, like Ken said, so that you don't incur that charge. And in terms of what to do with the 40K, we would say, like Ken said earlier, looking to diversify and investing more globally. And also do the calculations to work out whether investing maybe somewhere up north will be good return of investment for you and not exactly putting in the full 40K, but maybe 30K or even 25K and using the rest of money for any other expenses that may come up in regards to buying a property and renovations, etc.
Guys, if you really enjoyed this particular dilemma series, let us know by hitting that like button, because that just gives us a signal that you are enjoying the sort of content we're putting out on this channel. We'd love to hear from you guys in the comments, actually. Like, what do you guys think about Cheryl's dilemma? What would you do in her shoes? Should she take the money from her investments and pay off her mortgage, or should she not? And why? Okay? Jump in the comments and let us know. If you'd love to be on the dilemma series yourself, put some descriptions below this video, so head over and read those. But essentially, you need to send us an audio file in that particular format following the description below to dilemma@thehumblepenny.com.
Thank you guys so much for watching, and as ever, in all things,
be thankful and seek joy.
Take care.
Bye. Bye.